Real estate is crashing. I'm Nate, the FitFutureMD. Follow for more. So, what's going on in the real estate market, right? Like, for the last 10 years, it's been real estate. And now all of a sudden, interest rates go up and people are having problems with real estate. So, what do you as a normal person do to, you're making money, you still want to be an investor, you still want long-term to be able to succeed and be wealthy and, leave an inheritance to your family and all that kind of stuff. Well, has real estate changed in that? I don't think so. Like, in my area, people are still continuing to move here. They do not have enough housing here for the amount of people that are moving. They can't build it fast enough. They can't build infrastructure around things fast enough. Like, we're talking about construction projects that are taking, road construction 10 years to get where people can actually drive out there to these places, these country areas that they're, changing into neighborhoods and shopping centers and, all kinds of stuff. Like, but, higher interest rates are making it more difficult for real estate investors to make money, and the price of real estate go up as well, right? Like, so when things were at 3% interest, with the demand, price went, through the roof, up 20% a year, 2021 and 2022. Like, so now you've got those prices stuck up there at 40% higher, but now that the interest rate is doubled, that price to hold that real estate is doubled. If anybody that was on any kind of basically commercial loans are 5-year loans, so if those loans are coming up, they're going to be renewed at 6% interest, 7% interest, and it's going to make it harder for that real estate investor to make a profit, right? So people think that is the reason that prices are going to come down. I personally think prices will continue to rise back to their historical averages, which is 4% a year, right? So, and then certain areas will be higher than others, right? So I think North Carolina will continue to see 6-7% rises in prices, probably for the next 10 years, as companies continue to move their workforce here, as the retirees, figure out that it's a lot cheaper to live here and a lot better quality of life here. Real estate's going to continue to go up here, in my opinion. But so what do you do as a normal human being with a normal job? What do you do to make money in real estate? Well, number one, you start with the home that you live in, right? So there are a lot of programs out there that can get you in a home with no money down or very little money down, right? So, that's what we did. We did a 5% traditional mortgage, right? So with the traditional mortgage, I have no restriction on what I can do with the property, right? So I can, if I wanted to rent this property out today and make it a rental, I can. If I want to have a roommate, that pays me monthly to live here, I can do that. I don't have to worry about emergency stuff or anything like that. to justify whether I'm renting the property out. Like, there's no restriction on the mortgage, right? Whereas, you know, say you got no money, you know, and you're in a rural area like I am, you can use a 0% down USDA loan, right? And that does have restrictions, however, like you can't rent that property out. That property is just for you to live. But the whole point of it is that you want to be on the side of the appreciation of the property, right? Like if you know you're living in an area where properties are going to continue to appreciate, then it doesn't make any sense to, especially if you know interest rates have doubled, that means rents have to double, right? It doesn't make any sense to pay double rent, right? Like maybe you get locked in where you can pay a little bit cheaper rent for the next 3 or 4 years until those commercial loans, you know, they have to re-up those commercial loans, you know, so maybe you end up with a little bit cheaper rent for a little while, but eventually that rent is going to double because of the interest rate, right? So it makes sense to get ahead of that. And you know, there are people that say, you know, you shouldn't own a home because you should put that money into your business. You know, everything, all the repairs, all the maintenance, you know, that you could put that money into your business. Well, most people don't own a business, right? Most people are, so for business owners, that might be good advice not to own a home. I also disagree on that because you can use the equity in your home to fund and start up your business, right? If you need to, right? Because what's a business owner's most difficult thing is to get capital, right? And get capital that's not 20 and 30% interest like credit cards, right? So there's a big kick out there is like run up your credit cards to get money for your business. Like, no, that's interest at 30%. Like eventually, like, that's going to come back around and destroy you and destroy your business. Like, you don't want to do that, right? But that funds the bank. So like, that's what's, you know, the banks really don't make that much money off of mortgages, especially when it was down at 3%, right? You know, now you're getting 6%. 6% is not even hitting inflation right now, right? Inflation was 7% last year, 8 or 9% before the year before that, right? Like, you know, you're talking about high food inflation this year in 2023, you know, from eggs to grain, cereals, you know, all kinds of stuff are flying up. You're going to talk about meat prices going through the roof soon. You know, you want to be on the side of that appreciation, right? You want to be, if, you know, millions of people are moving to your state, to your county, to your city, you want to be on the side where you are gaining wealth because of that, right? So in my opinion, it's best to get into a home if you can, right? If the bank will lend the money to you, get into a home. Now, this is really the topic of the video, is like, well, what do you do to get into a home? Like, so there's 2 ways, right? You buy something that's brand new that they're going to build for you, lock in the price 6-7 months, and it automatically, and it's going to go up by the time you get to it. Or you buy something that's old, that's beat up, that nobody wants, right? And that's kind of what we did, right? We found a what you call a pig, right? And basically all we had to do was put lipstick on the pig, and you know, now we have a beautiful home, right? So the problems were with this home where it had a roof leak, right? So every time it rained, water would go down the wall into the carpet, you know, stuff like that. So obviously it had a mold smell and, you know, stuff like that. But that was around the chimney, We got a great guy, Robert Terry and Phil Terry, to fix our roof. And they did a great job. That's not a problem anymore, right? Also, the house, had a lady that smoked in it. It smelled like cigarettes in here, right? She had cats. There was cat hair and cat piss everywhere in the house. So got rid of the carpet, repainted, and now we have a beautiful home. But we were able to get into the home a lot easier with less competition trying to get the home, and for a lot cheaper, right? So we put, a little money into the house, and we, have enjoyed that appreciation, especially since people are trying to come here, right? So that's called, and then what you can do is you can refinance out of that and get all of that money, all of that appreciation as cash to yourself. Not all of it, 80% of it, right? But you can do that. We chose not to do that. We chose to leave it in because we like the point of where our payment is, right? So when you refinance out, your payment goes up. So we chose not to do it that way, right? But it doesn't mean that it's what you would pull the money out for. So if you're gonna pull the money out for the down payment on the next one, or down payment on a rental, or to fix up something else, which is called the BRRRR method, right? Then that's great. But we chose not to take that risk, right? So, it's up to you whether you take risk like that or not. But we're in a 30-year fixed mortgage at 3.6%. Like, our interest rate is less than half of what the inflation rate is right now. So we are literally doubling our money on our interest rate. So can't complain too much about that, right? But that's called the BRRRR method, and that means buy, repair, rinse, repeat, or something like that. Something like that, BRRRR method. And that's how most people, especially starting out, should buy a home, right? Like, it's great to go get a new home, but they're having to throw up these homes so fast that, and, they say the wood is not as good as old wood. I don't really know. I'm sure, housing standards have hopefully improved, over 40 years, 50 years, but the quality of wood might be better from back in the day. I'm not sure. All I know is I live in North Carolina, and all this wood has had to endure hurricane after hurricane after hurricane. So storm after storm after storm, But to each their own. Some people may want to have that turnkey move-in property, wait 7 months for it, lock it in at a certain price, and 7 months to go by, and you automatically have equity as soon as you buy it, as soon as you actually sign the papers or move in, and that's great. We choose to do the BRRRR method. We like to make things that are old new and update them to the modern way of looking at stuff, and that's how we do it. Hopefully this helps you out, guys. Let me know what your real estate strategy is. Obviously, eventually you want to move up in real estate strategy, whether that be into commercial property or, apartments or, more housing. So, and that's kind of how you build your real estate portfolio while building your stock portfolio while working a normal job, right? And, this is how you build wealth over time and to stop having to trade time for money. I'm Nate, the FitFutureMD. I lost 30 pounds in 30 days. Make sure you pick up that free health and nutrition guide in the description below. The investing guide is going to be coming soon. So when you see that, like I said, all this stuff is free currently, but eventually when I'm complete with all of it, it will be something that's paid. But I'm not done with all of it to my satisfaction yet. So you still get it for free. All I ask is for your name and email address, so that I know who I gave it to. Appreciate you guys. Hope I'm helping you. And we'll see you in the next one. Peace.